Good morning, traders. This is Shogun Chat 247. I train traders how to trade in harmony with the market. Today, I will be sharing a simple short-term entry model. This is when we do not have a bias basically towards a direction, but we want to trade short-term trade. The idea is very simple. The market gurus, they will tell you there's only two ways you can make money in the market. That's you sell at the high, you buy at the low, which is true, but you need to understand which high is a high, which low is a low. I've done videos regarding how to identify what a high is, which we call the last posted high or a last posted low. So I've identified we have an uptrend with this one. Okay, you can see price is moving nicely. We were buying, I think I posted a trade the other day last week. Well, this thing has been going up, but that is not a problem because you can see it's not just going up as like a straight line. It's giving you pullback and pullback, but there are some highs that gives you a lower low basically, and those are the highs that we are talking about. But we've identified one here. Okay, the simple idea is this: if there's no follow through above the high, after the high has been broken, then we're going to look for a sell setup. So what that means is we broke above the high and there's no follow through. So the candle that break above the high, so this is the candle, this is the break candle, broke above this and closed above it, and that candle did not have another close above it. So let's move the arrow to the side so that we can see we did not have any other candle closing above the high of this candle that breaks this high. So we are now looking for a setup, and you look at this: 1, 2, 3, 4, 5, 6, seventh candle, and none of them close above this. That is in itself, that is telling you a story. Okay, so once we have a momentum low candle, and I'm going to explain that because now we are talking about entry. We have a setup, now going to the entry. Entry short, that means we are above the high, there is no follow through. We are looking for a close below a momentum low bar. What is a momentum low bar? This here is a momentum low bar. You need to find a structural bar, then a trade below the structural bar gives you a momentum low bar. A trade above a structural bar gives you a momentum high bar. So this, in terms of this move here, this is our momentum high bar. Okay, and look at this, it closed above it, that's the entry. That gave you a nice cool move there. You can do this on any time frame. Now we are going to go short if we have a close below this momentum low bar, because the high has been broken, there has been no follow through. That means the buyers that came above here, you put yourself in the shoes of those who are making money, and the buyers that broke this high, they are not showing conviction. They have not done what is expected of them at the break of this high. Because when a high is broken, if there's conviction, you need to see a follow through. And if there's no conviction, there will be a failure, and that is the setup we have here. The same thing applies to a downside. If a low is broken, if there's no follow through at the low, that means the sellers are not showing conviction. Therefore, what will happen is they will fail at the low and the price will go back to the upside. So what we have right now, you have to be patient as well, because your behavior is what determines how successful you are or you're going to be when it comes to trading any methodology. The methodology itself can give you, let's say, 70 to 80% in terms of the probability of winning to losing, but how are you going to execute it? Your behavior in terms of, did you wait for the right setup? Did you wait for the candle to close? All those things. This is not a lot of things to follow, but I have trained so many traders that they find it even hard to wait for 10 minutes just for a candle to close, because they've seen a setup they think is going to work out. They are very itchy and they take the trade without waiting for the confirmation that everything has been ticked off on the list of the mechanical approach. Okay, so we have to wait. So you can see now the candle actually traded below the low of the momentum low candle, but it hasn't closed below. The rule states short when the close is less than momentum low bar. So the close is there basically. So this becomes an invalid setup when price break above here and close above here. As long as we don't have a close above this green line, but we have a close below the sell below momentum low, we will take a short trade and put our stop loss here. Guess what? This is why one of the key ingredients to a successful trading journey is following your rules. And you can see the price traded below the momentum low candle. It did not close below the momentum low candle. We did not take the trade. Then we had a break to the upside. So the buyers, even though at first they did not show conviction, now we can see they are now showing conviction. So this will have been, well, there's no low here, so we can't enter here. That's still the only valid entry we have in terms of buying. Okay, and this is not a last posted high, so we cannot trade this one. So we move on to the next one. That's the way you approach it. Then you look at another execution. Let's look at the euro US dollar. Okay, what do we have here? We have a high. This one had a follow through, so we are looking for a high that does not have a follow through. Pound US dollar, it had a follow through, especially on Monday. This is what we like to do. Be selective. If there's no trade, we don't take a trade. We just look, scan the market basically. Maybe this one, but I don't like trading the British pound Australian dollar because the spread is so big. Let's look at the euro yen. You can see those ones is the high there. That at the follow through, you can see the same thing is happening in the yen pairs. Broke higher this morning, then at this pause of maybe 40 minutes or 30 something minutes, then eventually we had the follow through. Let's look at the dollar yen. Oh, this is interesting. The dollar is showing sign of weakness. The remaining pairs are breaking higher, but the dollar yen remain below the pullback. Let's say high, 1, 2, 3. Anyway, I think we kind of get the point I'm trying to make this morning in terms of when you are using a mechanical entry, clearly write it out and follow the steps one at a time. Once the first step is done, so normally with any methodology, you need to have the setup. So you're going to have your trade setup. Then if the trade setup is valid, you move to the next step. What are you looking for in order for you to enter the trade, and what will invalidate? So you are looking for valid and invalidation. So valid trade setup, let's write this properly. Valid trade setup. Once you have a valid trade setup, then you move to the next part, which is entry. Then what will invalidate the setup? That has to be the most important thing, because if you have something that validates your setup, there must be something that makes it invalid in trading. That's the way it works. Okay, so you need to clearly state what validates the entry, what invalidates the setup, even after entry or before entry. Before entry, I say, is the most important one, because it saves you a lot of money. You don't have to take the trade, then you move to the next one. So even if you manage to take the trade, what will make that trade invalid? That has to be one of the most important part of creating a mechanical entry or mechanical strategy that you're using to take your trade. Okay, I didn't actually plan to do this morning. I was going to take a trade, but anyway, I hope this is helpful for somebody out there. If you like what you see, give us a thumbs up. My name is Shogun Chat 247. I hope to see you in the next video. God bless.